Good afternoon, traders and investors. Will back here with another one, coming to you live with a Tuesday market update. Hope everybody is doing well. So in today's news, markets continue their push past the all-time highs as your daily bulls remain in full control of the short-term timeframes. We also had some news come out of China as the Chinese government stepping in with some measures to counteract the most recent Chinese stock market sell-offs. So we're going to take a look at that, see how the Chinese stocks reacted on the day. And also we had Netflix absolutely destroying earnings, guys. It was a good one. So in today's video, we're going to cover that Chinese news on those stocks. We're going to cover a few earnings that I have prepared for you guys. Netflix, DR Horton, one of the home builders here, and Proctor Gamble to see how the consumer is dealing with the most recent price increases over the past year. And we're also going to go over our major indexes, of course, our major tech names, and lastly cover my portfolio as there was a few new trades made. So without further ado, guys, let's get right into today's video. So SPY up 0.29%, QQQ up 0.41%. Very decent broad market performance as a whole here, guys. Take a look at the heat map. You'll see that everything pretty much in the green, except for a few names to the downside. Johnson & Johnson to the downside in terms of healthcare. They did have earnings here today, but largely a very nice broad market performance day here. Healthcare performing well across the whole as the sector, and financials performing well across the sector as well here. On the one-day relative performance, you can see that we were led actually by communication services and defensives with a very good name here coming off the backs of those Proctor Gamble earnings here. To the downside, we did have real estate. Real estate, we'll see why it was led to the downside by one of our home builders here, DR Horton, but they had a tremendous rally over the past 2 months. So pulling a little bit back here after earnings. We'll take a look at that. On the 1 week relative, everything is looking fairly decent here, guys. Technology, communication services, industrials, and financials are your leaders. To the downside, we do have real estate and utilities. Utilities continuously struggling here. Every time rates tick ever so slightly up, utilities tend to trade lower ever so slightly as well. So that's a bit of a normal trade right there. So as a whole here, guys, what happened? So let's get into some news from China. So what came out of China this morning after the markets had been plunging so badly over the last couple of weeks here, guys? Chinese government finally starting to step in, saying enough is enough to the pain. So China is weighing measures to prop up its stock markets, could reportedly mobilize $278 billion. So the Chinese authorities are aiming to get about $278 billion through offshore entities. Chinese policymakers have put aside 300 billion yuan of local funds that would be used to invest into onshore shares. They're kind of looking to backstop their own stock market here, right? They're considering a rescue package backed by offshore money to stave off a slump in its struggling stock markets here. Said Chinese authorities are aiming to get about the 278 billion, primarily through offshore accounts of Chinese state-owned companies to help stabilize the market by purchasing stocks onshore through Hong Kong markets here. So mainland China's CSI 300 index slid 11.4% last year, clocking its third straight year of fall. So it's really been a bad time for the Chinese economy. Chinese consumer is obviously slowing down. They're getting into a little bit of a recession over there in China, slowing sales, slowing economy, and the likes here. So the Bloomberg report comes a day after Chinese Premier Li Qiang said during a state council meeting the country will be rolling out measures to stabilize its markets. We must take more powerful and effective measures to stabilize the markets and confidence. So this comes after the stock market in China has been on an absolute tumble to the downside here, guys. Take a look at this sell-off, right, which pretty much started 2 years ago, back in 2021, and really is perpetuating now almost on its 3-year mark coming up in February of straight declines. You can see here almost monthly oversold, and we're really back to prices here that you would be able to find back in 2018. So almost 5-6 years worth of data have we lost in the most recent sell-off in the Chinese markets. So very, very positive news in terms of the Chinese government coming in to backstop, really reaffirm confidence in its own markets. You can see markets reactive positively. This is the Hang Seng Index, also known as your Hong Kong stock market here. So the news coming off really positively. Has really been on a steep decline. Look at this sell-off, guys, over the course of 2023. Really no no fun for anybody who's been investing in Chinese stocks, down over 33% over the past 1 year span, and really coming close to previous lows set back in 2022. And before that, you had to go all the way back to the Great Recession in 2008, 2009 to find these similar prices. So that's why the Chinese government is stepping in, and it really had a positive effect on a lot of stocks. Take a look at Alibaba, up almost 8% on the day. That's also off of news that Jack Ma was purchasing $50 million worth of shares. So the founder of no longer CEO, but still founder of Alibaba, coming in and really adding to the positivity on the day here today for Alibaba. But a couple other notable Chinese names were up as well. JD.com up 7.2%. Tencent Holdings, you can see this as well. Tencent Holdings, one of the largest conglomerates here in China, they were up about 5.5% here. Also companies like Baidu, well-known company as well, they were up about 7.5%. So really good recovery here by Chinese stocks after this news by the government. So looking forward to see if the momentum will continue to the upside. So that's it for the Chinese news. Very pleased to see that, as of course we are exposed to a little bit of Chinese stocks in our account here. We obviously have some Alibaba shares. We also have some plays that are indirectly exposed to China in the names of Starbucks and Nike. So looking forward to see if the Chinese consumer will be able to recover over the course of the year here from the rut that their economy is in relatively recently. Now, let's get into some earnings here, guys. And we're going to start off with a bang with the big one, Netflix. So Netflix here ending up 1.33% on the day. But in the after hours, guys, look at this after hours move by Netflix, up pretty much 9%. They absolutely destroyed earnings here, guys, today. And we did have a positive lean here. We were saying if ever the stock were to pull back in the 450, 425 area, that would be a buy. But your bulls were always in short-term control, as we had been saying over our previous live streams and market coverages here. So nice to see Netflix really delivering on consumer and investor expectations here. You can see ever so slight miss on EPS, but really nice boost on revenue here. And the headline was the subscriber count, guys, absolutely destroying the subscriber count. Netflix had 13.1 million subscribers in the quarter. Tops revenue estimates as membership push gains steam. So this is actually almost a over 50% beat on the quarter. The analysts were expecting anywhere between 8 to 8.8 million. We actually got 13.1 million, excuse me. So we're now up 50%. This was beating everybody's expectations by a wide margin. Last quarter's membership growth was about 8 million. So we were expecting slightly more than that. And we got a very juicy add to that. So Netflix really adding that, and a lot of good things that the company had to say. The company now has 261 almost million paid subscribers. Very, very decent beat indeed here. The subscriber growth easily tops the 8.76 million paid membership adds Netflix reported in the third quarter. The company also blew past Wall Street's fourth quarter expectations of 8 to 9 million with that 13.1 million number here. Very, very good. Look at this. Also increasing guidance as Netflix focuses on improving profits. The company increases 2024 full year operating margin forecast to 24%, up from a range of 22 to 23%. So company operating margin is really growing. Their free cash flow is growing as well. It cited weakening of the US dollar and a stronger than forecast fourth quarter performance here. So very, very good. Company also projecting EPS of 449 for the first quarter of 2024, higher than the 410 Wall Street had expected. So increased guidance, revenue beat, subscriber beat, everything is going very, very well for the company here. And I'll remind you guys, Netflix is really coming back with a tear here. So if we take a look here at the financials, you'll see that the main thing for Netflix was always profitability. If we take a look back here, right? Take a look back here in our previous free cash flows. You can see 2018 negative free cash flow, 2019 negative free cash flow, and then 2020 they started positive free cash flow here, but it's really been increasing steadily over the last 2 years. You can see 2022 free cash flow 1.62 billion. This year that just ended, Netflix has just reported almost $7 billion in free cash flow. So that is exactly what you want to see here, guys. Revenue increasing, EPS increasing, and now they're really bringing a lot of money to the bottom line. And it's also allowing them to do a fair amount of healthy share buybacks as well. So take a look here from your Netflix call. I just want to bring this up here, guys. This is in terms of their monetization. We talked about this a few times on the channel when we bring up Netflix stock here, right? So ads. Scaling our ads business represents an opportunity to tap into significant new revenue and profit pools over the medium to longer term. In Q4, like the quarter before, our ads membership increased by nearly 70% quarter over quarter. So this is the new advertising tier that Netflix has introduced. It comes in at a cheaper monthly subscription price, but also you have to watch ads, right? So they're trying to monetize as much as they can. And you can see it's been going very well in terms of subscriber growth. That's the main category here that's adding to their subscriber growth, is that cheaper advertising tier that people seem to be really liking. and phasing out. They're going to phase out the basic plan for new and rejoining members in the ad markets. The ads plan now accounts for 40% of all Netflix signups in our ads market, and we're looking to retire the basic plan, which is about $15 a month, in some of our ads countries, starting with Canada and the UK in Q2, and taking it from there. On the advertiser side, we continue to improve the targeting and measurement we offer our customers. So really ramping up this advertising tier. This is going to be fantastic, guys, for EPS and margins going forward. So very, very, very good here, right? And you can see this is, once again, they reiterated here in their earnings call, the negative to now positive free cash flow. So this is how we were sitting 2016 to 2019 here. They were sitting at negative free cash flow, and that was one of the big gripes that a lot of analysts had with the company. Now, 2020 to 2023, you can see they've generated a ton of free cash flow, and forecasts for the next year are going to be another $7 billion for 2024 in free cash flow. So that's going to allow them to do a lot of buybacks here. So very, very good performance here, right? So you can see, if I can find the buyback authorization, it's right down here, right? So we continue to expect 2024 cash spend on content of up to $17 billion. In Q4, we repurchased 5.5 million shares for $2.5 billion, and they still have 8.4 billion remaining under their current buyback authorization. Very, very good. So they're generating a lot of free cash flow and continuing to do buybacks with the money that they're earning. Very decent report by Netflix. I'm extremely pleased with how the company has been performing here in terms of their growth. And we'll go over the technical analysis when we cover our major tech stocks. So that's pretty much everything I had for Netflix. Now let's dive into one of the home builders here. So we're going to go over DR Horton. So DR Horton, if you guys remember, if you've been on the channel for a while, last quarterly earnings for the home builders were excessively good. Last quarterly earnings, we were saying that the reason that the home builders were having such a good year as a whole here, guys, was because there's really a lack of old homes available on the market. With interest rates so high, your supply and demand are kind of locked. Nobody wants to sell their house because there's not much on the market to buy. And in terms of getting a new mortgage at 6, 7, 8%, people aren't really enticed to do that. So what they've been doing is they've been flocking to new homes by the home builders. Now, the home builders are well known for subsidizing interest rates to their customers. So what they will do is that they will offer you an interest rate of about 2-3% if you buy a home from them. Obviously, 2-3% is not the market interest rate, so they take a hit in their margins. The goal for them is to sell all of their production. So they're subsidizing their production by offering customers lower than the market interest rates to really get demand, keep demand rolling forward. And this has been the moral of the story for this trade. But now they seem to have hit a little bit of a wall here. So keep an eye on DR Horton, their earnings here. Down on EPS by about 1.5%, beat on revenue here. The revenue continues to increase as the sales of new homes increase. And this company, guys, I mean, these home builders have been at all-time highs. You take a look at DR Horton, you take a look at Lennar Corporation as well, right? A lot of the major home builders have been skyrocketing over the past year, but I do believe that this trade is on its last legs, because when rates will be coming down, guys, it's going to open up a lot of inventory on the homes market here, and people may not be flocking to these new homes as much as they have been with the lack of supply on the market recently. So this trade should be coming to an end, in my opinion, on the second half of 2024. They've had a great rally so far, but the narrative for this trade is potentially waning out. So here's the headlines. DR Horton stocks dives as lower prices for new homes hurts profits. So now they have hit the price wall. So they were increasing prices, but now consumers are not willing to pay the extra step here. Incentives were increased, so meaning that's what they do, right? They provide incentives in the form of lower interest rates, and home prices were lowered to provide better affordability to home buyers. So these two things, lowering of home prices and increase of incentives to boost demand, what does that translate to, guys? Reduced margins. These two things hit them in the margins, but they do have a little bit of wiggle room here. The home builders do have significant margins here in terms of net margins. We're talking anywhere usually between the 13 to 15% range here. So in terms of DR Horton, not that great performance by the stock. That's not what investors wanted to hear here. Shares of DR Horton were suffering the biggest sell-off in nearly 4 years on Tuesday after the home builder missed profit expectations as elevated incentives to buy new homes ate into margins. So here it is, that current headline. Given current affordability challenges, that pressures on margins and therefore profitability is likely to continue in the near term here. So here we go, guys. To adjust to changing market conditions during 2023 and 2024, we have increased our use of incentives and reduced home prices and sizes of our home offerings where necessary to provide better affordability to home buyers, said the CFO here, right? So based on current market conditions, mortgage rates, and continued affordability challenges, we expect our incentive levels to remain elevated in the near term. So potentially still going to have problems with that bottom line profit here as they try to really continuously get rid of their inventory on hand by offering these incentives, right? So missed expectations on that side. And even the analysts were not expecting that here, right? So even though the revenue grew, the number of homes closed jumped 11.5% as well to 19,000, right? So this is a very good number of homes closed, right? In terms of the homes that they build and then the homes that they close, meaning that they sold 11.5% jump here. Very, very good. But the average closing price was down almost 3% to miss the forecasts here. So bit of a mixed result here from these home builders. But like I was saying, guys, I do believe that this trade is running on the last end of its legs here, especially when the rate decreases come into line. I do believe that that will be a signal to potentially get out of these home builders as a trade. It's been a very, very beautiful trade here over the last 2 years approximately. But at this point, guys, you have to be expecting the rate cuts. The only reason that these guys were doing so well is just because there's no inventory on the market and people are flocking to the new home builders because they're offering such great incentives. But when rates come down and more inventory, existing homes on the market come onto the market in terms of availability, well, obviously, these guys are going to have a tough time to continue performing the way that they have over the past year and a half. And now lastly, guys, we're going to do one more. We're going to cover Proctor Gamble, then get into our technical analysis. Proctor Gamble, I like looking at them, guys, because they provide a good insight into pricing power. Does the company still have pricing power for the consumer here? So Proctor Gamble, guys, if you don't know what they do, Proctor Gamble, very defensive stocks. They own a bunch of consumer products. So you can see they have pretty much a segment here that's relatively reserved to cleaning products in terms of laundry or dishwashers, right? More cleaning products down here. They also have a few products in the form of a slightly healthcare touch, right? Pepto-Bismol, Vicks is one of their brands, Metamucil. They have the batteries, Duracell. They have Braun razors as well. They have a bunch of products here in terms of grooming. This is their whole grooming segment, right? Which is basically deodorants, razors, toothpaste and the like, shampoos and whatnot. And then they have a beauty segment up here, right? So very defensive play. All of these items are items that consumers usually need and can't really substitute for much else other than name brands, right? So we'll see a better part of their revenue over the past year and a half, 2 years, has been their ability to increase prices and the consumers were willing to pay. But as you'll see in this report, guys, that is coming to an end. So beat on EPS here, largely boosted by their increases in prices and a slight miss on revenue. I like Procter & Gamble. I really like them, guys. This area down here, right, the whole 145, let's call it, all the way down to about 140 is a beautiful area to be writing puts. I've done this a few times over the course of the year, and every time they dip down there, I do think it's a very decent buying opportunity. Very defensive stock, usually just grows over time. Very, very, very consistent growth of revenue. Decent margins for a manufacturer as a whole, guys. 17, 18% margins, nothing wrong with that. And trading at a relatively decent value. They do pay a dividend and only trading at about a 25 PE, not that rich at all. Let's take a look at their earnings real quick. Procter & Gamble price hikes boost revenue while Gillette write-down weighs on earnings here. So here we go. Company narrowed its outlook for full-year adjusted EPS, although its forecast for unadjusted earnings fell due to its plans to write down Gillette and restructure certain markets, so restructuring certain items of its brand, which is leading to a couple big losses here on the balance sheet, but as a whole, fairly decent. But the moral of the story here, guys, is this. After roughly 2 years of higher prices on their Charmin toilet paper and Downy fabric softener, consumers have pulled back on their purchases of P&G products. So consumers potentially opting now to go with the no-name brand. So instead of going with the named brands, right, maybe substituting some products into some household products, no-name brand products, right, store brand name products that may just be cheaper as the consumers are no longer willing to pay for those price increases. So they had pricing power, and now they're peaking on the pricing power. So I have to be careful with companies like this, guys, leading into potential recession fears and potentially markets right now where discretionary income is relatively low, consumers are no longer willing to pay for the higher ticket prices. They would rather substitute for a no-name product instead of going with, let's say, Tide, or instead of going with Crest toothpaste. They'll go with something that's on sale, right? So the company narrowed its outlook for full year adjusted earnings per share. And here we go here, guys. The price hikes helped boost revenue by 3%. So it's all, their entire gain in revenue here was due to price hikes, but not due to volume. And this is where we're going to go get lower here into the article right here. Net sales rose 3% to 21.44 billion, just shy of what Wall Street had expected here, right? And here we go. Product volumes. This is all I want to cover on this thing. After roughly 2 years of higher prices on their Charmin toilet paper, this is the headline. Consumers have pulled back on their purchases of P&G products. The company's volume was flat overall for the quarter, and only its grooming business reported volume growth. The metric excludes the impact of currency and pricing changes to reflect demand. Of course, demand has improved in North America and Western Europe. However, other markets saw weaker demand. Greater China saw organic sales shrink 15%. That's normal. China is obviously in a very tough economy right now, right? So here we go here, guys, right? P&G's beauty segment reported flat volume. The grooming division saw volume grow only 1% in the quarter. So you can see here, guys, the company's healthcare division reported volume declines of 3%. The feminine, baby, and family care business saw its volume fall 2% in the quarter, fueled by shrinking demand for diapers and tampons. So here we go here, guys. A lot of their lines of business here, the total overall volume is falling. Now, that's being offset with price hikes, but as we've seen now, consumers are no longer willing to pay for price hikes. So what is potentially coming for this company? Maybe to stimulate demand, they will have to actually reduce prices. So they're going to take a hit on the margins here, potentially increase revenue over the next course of the year. Now, these numbers aren't very large per se, but it just goes to show the trend right now here, guys. Consumers are really done with paying for higher prices in terms of a lot of these products and are substituting away to no-name brand items. This is very, very, very important to note. This is once again, guys, why right now is the time to be invested in companies that still have pricing power. So many of these companies are hitting the peak of their pricing power. And if revenues start declining here, what they're going to have to do is cut prices and cut margins. That's not going to be good for short-term EPS or even midterm EPS and profitability. So we really need to focus on stocks here, guys, that still have pricing power with consumers. Procter Gamble running out of pricing power. That being said, I still do believe that this area down here, 145 all the way to 140, a very decent area to be playing for short-term options trades here. But Procter Gamble, not really a company that I would be investing in right now for a swing trade to the upside, right? Don't think this is going to see some massive increases in share price right here from the article that we just read. The company's running out of pricing power, running out of margin potential right here. So that usually when those two things happens, guys, when you have margin compression, EPS compression, your stock price doesn't go on an absolute roar, right? So just keep an eye on a lot of these defensive companies in terms of that. Now, with all that being covered, guys, let's get right into our technical analysis, shall we? So let me get a quick sip of coffee and let's go. So we're going to do these very quickly, guys, as nothing much has changed. So SPY daily uptrend simply continues as soon as this move tops out, looking for a daily higher low, bulls creating a ton of space. Anything above 470.35, just looking for a daily higher low for further trend continuation. Keep an eye here, guys. Your previous resistance, 478, which is really close to your all-time high. This yellow line, 479.62-ish. This whole area right here should be very, very decent support if ever we do come down. Basically, breakout of the all-time high, retest before future uptrend continuation. No red flags in SPY whatsoever as a whole right now, and you are above your moving average as well. How will you know that this move is topped out? Just keep an eye on your hourly trend changes. If we lose the hourly trend change, that's when you know your daily consolidation is underway. On the weekly, everything looking very healthy still. Weekly uptrend more than confirmed, and now bulls creating a ton of space off of your weekly lows. So if eventually this daily uptrend tops out here and start resuming into potentially a daily downtrend, that will just be opportunity for a weekly higher low. The higher we get above this all-time high, the more likely it is that when we come down, we're just going to sit on it, use it as support before price continuation here. On the monthly, everything looking very, very beautiful. Monthly uptrend past your all-time highs. No red flags. Bulls in full control of all time frames. QQQ, same thing. Bulls in control of this daily uptrend more than confirmed right now. QQQ really lifting past its all-time highs, right? 403-ish. we're now significantly above our previous all-time highs, guys. We're talking about almost 5% on QQQ above the all-time highs. So that gives us some very, very good space. You'll see this whole green box is your previous all-time high resistance. So if ever we do pull back, that is going to be the likely area of support. But as a whole, as of now, guys, right, very decent daily uptrend. Any pullback at this point just for a daily higher low above 403. Tons of space for the bulls to set that before a future daily trend continuation. At this point, weekly is looking beautiful as well. 1, 2, 3 weekly legs up. So whenever we do top out on this daily move, let's say for whatever which reason we lose the daily uptrend for some reason after this, there's so much space, guys, on the weekly to pull back. You can pull right back into your all-time high area right here. Bulls should be able to use this very well as support. Anything above 396.68, just going to be fair weekly higher low as well. And monthly breakout on QQQ is absolutely gorgeous. So we'll see, how do we close the month? Only 1 week and a few trading days left. And we do have Jerome Powell next Wednesday on the 31st. So we'll see. Can that continue to propel markets higher, or will Jerome Powell and bad tech earnings act as a catalyst to start pulling us back here into further consolidation? As of now, no red flags. XLF Financials performing beautifully here. Beautiful engulfing move. So after having lost the daily uptrend, daily downtrend, 100% engulfing move, the bulls have created so much space that now the likely scenario is any pullback just for a daily higher low for further trend continuation. Now that we're above this whole area of previous resistance, right? This whole area right here, roughly speaking, will be acting as very juicy price support. We also have our 12 EMA right in there. So expect a little breakout, potentially retest of the zone, higher low, anything above 37, just for a higher low for further trend continuation. And on the weekly, guys, everything is looking very good, right? Weekly uptrend, weekly higher low is set, and now weekly higher highs are in motion. So daily, weekly, and even monthly bulls here are in full control of your financials charts. No red flags coming up to our previous all-time high area, guys. That's going to be 39 all the way to $41, this whole area right here. So we're quickly approaching our next area of resistance, and very happy that we're now well past our previous area of resistance. So now we will be challenging the all-time highs, and financials are looking very decent, guys. No red flags. XLV Healthcare still on its road to recovery, down a little bit on the day here today, but still on its path to recovery. So after losing the higher highs, higher lows, lower low was set after flushing your low here, 138.55. The bulls now trying to put in a decent sized bounce here. The higher the bounce goes, the more chance they have of recapturing your daily uptrend, but playing some good defense of your 12 EMA right here. So bulls are looking very healthy, but if any which case we get the lower high and lower low for downtrend continuation by the bears here, that's fine. Just looking for a weekly higher low on XLV. XLV with tons and tons and tons of space here, guys. 136 all the way down about 133 area is the area I'm targeting. If ever we get some extended pullback here on healthcare, potentially maybe some bad earnings or whatnot, but I do still like healthcare. Healthcare quickly approaching now as well to the upside, our all-time high area of resistance, which is going to be about 142 to all the way to 143. You can see here 1, 2, 3 touches and fail of your all-time high. So now we either are going to try to challenge this right away, or we may have to pull back, accumulate a bit more before we get another weekly up. Either way, guys, the bulls are looking very, very healthy. I like the size of this bounce. Just need to reconfirm the daily uptrend, and then the bulls will be in full control of everything. They're in control of the monthly right now. We're still in control of the weekly. Just the daily that we need to recapture, similar to what healthcare financials just did, right? It's very nice on healthcare. Now the Russell, you know, red day, gap up open into a little bit of profit taking. But what did the Russell do today? Exactly what we wanted. Daily downtrend was confirmed. We were then looking, when this daily move down bottoms out here, look for the size of the bounce. And the daily move really came almost down to our midpoint of this whole range. This whole range, the average was these two yellow lines. You can see that best by our longer term and short term moving averages, right? So we kind of came to weekly higher low, and now making a bounce attempt right back here into this big area of weekly resistance, right? This whole 195 up to 200 zone has been plaguing the bulls now for about a year and a half. So we'll see, can we start getting above it now? Well, we're making some good progress on the daily. Look, daily engulfing move now. The bulls now creating enough space to set a new daily higher low for potential trend continuation here to the upside, which will be a nice daily trend reversal to the bulls. As soon as we confirm this daily trend to the upside, it means your weekly higher low is set, and then we are moving on to potential challenge of these most recent highs right here. But step number 1 is complete, guys. The size of the bounce is good enough to give the bulls a chance at a new daily uptrend stab. If we do, for whatever reason, start setting that daily higher low, sooner than later, right? Instead of going like this and doing that, right? If we start setting it sooner than later, I'm going to be looking to start a position here on the Russell lower 190s. I'm going to be using TNA, the 3X levered Russell ETF right here, but everything looking fairly decent on the Russell as a whole. And now lastly, guys, your Dow Jones. So Dow Jones performing very well after pretty much putting in a similar move to financials, right? These charts almost look the same. Dow Jones, right? Loss of the daily uptrend, daily downtrend was set. Bulls, 100% engulfing move, recapture of your 12 EMA. Bulls now looking very good. Any move lower, guys, just looking for a higher low above 37,000-ish, right? Bulls created a ton of space. Going to be using this whole previous area of resistance now as support. So going to be tough for the bears to break through that in one clean shot. Should be fairly good for the Bulls. Bulls, really on their way. The key was the weekly, guys. Weekly bull flag at the top here. Really love to see when bulls put in such a very decently sized move. Consolidate for 4 weeks at the top. The bears not even able to bring it down that much at all. Really gives us a beautiful weekly bull flag for future continuation here. And you saw it, the monthly bulls were always in control after such a strong November and December here. Continuation was likely to be expected. And now bulls doing a great job at that. So no red flags on the Dow Jones whatsoever. Now let's move down into our major tech stocks here, guys. Apple continuing its rise here. So Apple, if you ask me, guys, if I were a betting man, right, is Apple going to eclipse their all-time highs before their earnings? I don't know, guys. I really don't know. I wouldn't think so here. Earnings coming up next Thursday, right? And that's going to be a big ask for Apple to push above its all-time highs before earnings. But we'll see. But one thing's for sure, daily uptrend is now confirmed, well above our moving averages now. So as soon as this move tops out, how do you know the move's topped out? Look for the loss of the hourly trend change. As soon as we lose the hourly trend to the bears, well, that is when your daily consolidation is going to happen. But bulls with so much space here, guys, right? Off of the lows, off of 180.50. Any move lower is going to be for a daily lower high for further trend continuation here, guys, right? And if we do pull back, I will be targeting this area right here, right? 188.70. Previous support right here, and the moving averages are right there as well. So if we top out in the next few days, that would be my line in the sand level for the bulls to protect. And also from the bottom, that would mean that the bears would only retrace, under 50%, which would give our bulls the best chance at resetting this daily uptrend to the upside. But earnings is very, very close for Apple. But the daily bulls have now recaptured the time frame, so good thing for them. And even on the weekly here, guys, the weekly move is getting very nice and tight as well. So we'll see, can we continue to potentially tighten up for another couple of days here leading into earnings? That would be very, very good. The chart looks absolutely amazing on Apple. I hope people were able to buy the dip down here in the sweet spot. Everything looking very, very decent for Apple. Just getting a little bit topish here on your 4-hour and on your 1-hour time frames as well. So a little bit overbought in the short term, but like I said, a lot of space for Apple bulls to come down, consolidate, set the daily higher low, and rise. We'll see, can they set the daily uptrend before earnings, or will we just potentially consolidate a little bit and then go into earnings, and then we'll see what happens after earnings. Now moving into AMD. AMD still consolidating here on the day, but like we were saying in yesterday's video, AMD with tons of space here, guys, right? Such a beautiful daily uptrend on AMD right now. Any move lower, which is continuing at this time, right? Any move lower, just looking for a daily higher low, anything above 143.86 for a daily higher low for further trend continuation, just cooling down our daily time frames. We're very overbought on the 4-hour as well. So we'll see here, can the bulls set the daily higher low and then continue the rally here? Or will they potentially fail this, set a daily downtrend, and then we'll be in for a weekly consolidation? Even on the weekly, guys, beautiful weekly uptrend right here, right? Any pullback, looking for a weekly higher low above 134. So much space. And now, still battling with our previous all-time highs, still above them now. All-time highs are about 164.51. So we're kind of using those right now to kind of sit on top of, as you can see, the price in the past few days, rejecting at the 164, 165 level, which is our previous all-time highs. So keep an eye out for AMD, but everything looking very, very good. AMD also with earnings next Tuesday. Now moving on to Amazon. Amazon, very decent day here, 0.8% to the upside, right? Just looking for that daily uptrend continuation at this point, or at worst case scenario for the bulls, you would like to see them set a little bit of a bull flag, right? Similar to what we had back here. Nice tightening up of the range at the top end of a move, right? Very, very tight. You can see this. It is a straight bull flag currently, right? So maybe in for the same thing, right? Nice little bull flag right here. But as a whole, Amazon performing very nicely. Daily uptrend is more than likely confirmed at this point, even though we didn't crack the double top right here. So just looking for the bulls to maintain this tightening range at worst. And at best case scenario, obviously the next few days, they just smash this, confirm the daily uptrend, right? But line in the sand remains 150. Don't want to see the bulls drop much below that. If they do, it would be a daily confirmed downtrend. We just be in for a bit of weekly consolidation, but weekly consolidation, anything above 144, guys. So healthy, so much space. And coming down into that level, guys, the lower 150s, right? You got your weekly 12 EMA. You got this massive area of support right here, right? 148 down to about 140. I know it's a wide range here, guys, but it's just going to be so tough for the bears to break through that. Amazon with earnings next Thursday, but everything looking very, very healthy on Amazon for potential continuation, an area of continuation to the upside, excuse me, if we get continuation, well, you're looking at these guys right here, right? 166 all the way to about 170. Amazon still with some good risk reward, guys, still 16, 17% off of your all-time highs. Now moving on to Google. So Google looking good. Google up 0.66% on the day here today, right? So daily uptrend simply just continues on Google looking very healthy, right? Areas of resistance to the upside, guys. All-time highs, 151, 152 is the last stop for Google before new all-time highs at this point. Everything looking very, very healthy. Google never lost the daily uptrend despite our early year consolidation right here, right? Daily uptrend just continues. So as soon as this move is topped out, let's say we top out near the all-time highs, can't break them right away, set up perfectly to set a daily higher low, which may be set on top of this level right here, 145. That would be right in line with your 12 EMA. Previous resistance, now going to be support here. Google looking very healthy on the daily, right? Anything above 140.52, just looking for a daily higher low. On your weekly trend is looking absolutely gorgeous on Google as well. Weekly confirmed uptrend, so much space above our most recent higher low right here at about 137, right? So much space. Google looking very, very healthy as a whole. Bulls in full control, guys. Full control of the monthly here, full control of your weekly time frame, and also full control of the daily. So no red flags, just approaching a little bit of resistance close to the all-time highs soon. Now moving on to Meta. Meta also looking good here, guys, up about 1% after a gap up open and taking profit yesterday. But Meta also one that never lost the daily uptrend over the course of early January consolidation here. So Meta, what can I say about Meta, guys? Everything is looking absolutely healthy, right? So the next area of resistance, as long as we're in a daily uptrend, we look for targets to the upside. Targets to the upside, guys, well, there are no more because we're past the all-time highs. So it has to be psychological levels at this point. We're going to be talking about roughly $400 psychological level as resistance for Meta, which would be a likely resistance point right now. In terms of your daily, you're still looking very, very, very healthy. So much space created, right? Any move lower now, just looking for a higher low above 358.85. Keep an eye, previous resistance going to be current support lining up with your 12 EMA. So this area right here, right, 374, 372-ish should be a likely area for the bulls to set some support zones. And in terms of the weekly, no red flags on the weekly. Weekly uptrend simply continues at this point, and monthly breakout for Meta as well. Obviously, they do have earnings as well coming up next Thursday, so we'll see how they perform in terms of that. But looking for very, very good things on Meta as a whole. Actually, about 2 weeks from now, right? No, actually next Thursday. My bad. So going to be looking out for earnings on Meta. Should be fairly good, guys. They've really been reducing costs in a very efficient manner here, boosting margins, boosting EPS. It's really back to basics for Meta. I'm not really expecting anything negative out of the earnings report whatsoever. So looking very, very good on the technicals too. Now moving on to Microsoft. So Microsoft performing very, very good. Again here, Microsoft up about 0.6%, just continues its march past the all-time highs right here. So daily uptrend just simply confirmed and continues by Microsoft at this point. This whole area of consolidation, right? Just looking for a daily higher low, anything above 385.68. Daily higher low for further trend continuation right here. On the weekly, you see it best on the weekly, right? Weekly consolidation, very, very tight range, and now breakout. Weekly uptrend confirmed. And monthly uptrend just continues on Microsoft. So really nothing to say about Microsoft as a whole. I'll be doing a video over the course of this weekend, guys. Is big tech overvalued? In short, guys, the answer, in my opinion, is no. So even though, I wouldn't load the boat with Microsoft right now, I still do love Microsoft for any long-term portfolio, even at these prices, guys. If you have a time horizon of 5 to 10 years, it's a very easy buy, in my opinion. Just for short-term trading, a little bit rich for me right now. I would prefer to get Microsoft. If I can get them back in a 380, 375 zone off of any extended dip, that is going to be best for me. Earnings next Tuesday after the close. So keep an eye very closely on Microsoft. But as of now, no red flags. Bulls control everything. Netflix. So Netflix now boosting higher. So we're going to put this here, right? So their after hours close is, let's check it right now, about 5:31. Can't see it on the chart right here because we're after hours. So let's just put a line right up here about 5:31, right? So they are in a new confirmed daily uptrend at this point. This is what we were waiting for here, guys. We were saying that Netflix could go either way. If they went to the downside, 450 to 425 would be a likely retest zone. Why? Just going to be looking at that point, guys, for your monthly higher low, but that's not what we got. We got a continued daily uptrend right here. So we were looking for daily higher low and daily trend continuation, right? Recapture of the daily trend to the bulls. It's exactly what happened after our after hours tomorrow. We're going to be opening in this area tomorrow morning here. Very good daily trend recapture. So at this point, guys, any pullback after that earnings move, just going to be for a higher low, anything above 476.65, higher low for further trend continuation. This whole area, 500, going to be acting as beautiful support at this point. Was previous resistance, should now be acting as support, and future resistance areas on Netflix, right? Netflix, really, the next area of resistance that I see likely in my mind right here, guys, is going to be about 560. So this is going to be your previous big zone, big chop zone. We're pulling into it now, right? The top end of that, guys, is going to be about your 550 to about 560 range. That's going to be the likely area. And then we're all the way up to about 622. So just keep an eye on that here, guys, right? This whole previous channel that we had back here, I know it's a wide one, but just keep it in mind, right? We're in it right now. So if we break above this in the next few days off of continued bullishness for earnings, that would be your next area of resistance, about 616. Bulls looking very, very healthy at this point. Weekly breakout is now confirmed too. So take a look at this weekly breakout. After your earnings move, weekly uptrend just continues. And at this point, guys, your monthly uptrend simply continues on Netflix as well. So very, very, very healthy move by Netflix after earnings, breaking a big area to the upside. Very happy for bulls. Congratulations to all you Netflix bulls out there. Moving on to NVIDIA. NVIDIA, guys, man, they just do not want to come down, do they? So this really still one move here, guys, never losing the hourly uptrend, right? So as long as you don't lose the hourly uptrend, daily consolidation is still not underway. So now NVIDIA with so much space, it's so disgusting, right? Anything above 475, guys, pretty much just looking for a daily higher low off of any pullback or for daily trend continuation here. Once they do pull back, we'll gauge the size of the pullback. A large form pullback, something like this, would potentially equal out to an equilibrium or tightening range here, leading into potentially earnings into February here. But if we just get a very shallow pullback here, right, if we just get a very shallow pullback before reversing the hourly back to the bulls here, could be very likely a daily trend just continues. So much space now. Weekly uptrend more than confirmed at this point on Netflix too, on NVIDIA, excuse me, and monthly uptrend just continues at this point. So your future resistance, guys, all-time highs, right? Psychological, $600. Then your analyst targets are all the way up at about 650. So those are the next two areas of likely resistance. But in NVIDIA right now, bulls, full control of everything. Now Tesla. So guys, Tesla 0.16% to the upside only. They were as high as about 215 today, but pulling back intraday. Tesla earnings tomorrow, right? So we've been over this stock a bunch of times. You guys already know the drill for Tesla tomorrow. It's all going to be about EPS, margins, and guidance. We need Elon Musk to do a lot of damage control tomorrow to say positive things about the company, because they've had a lot of price cuts. They've had price cuts in North America because of high interest rates. They've had price cuts in China because of an ongoing price war with BYD and other Chinese electric vehicle makers. They've had price cuts in Europe as well because of the high interest rate situation over there as well. And they have been having shipping concerns here, which led to the shutdown of the Berlin factory due to the issues in the Red Sea, shipping times taking longer. So them having to readjust here and close down the factory. So all that being said here, guys, we need to have some good management on the call here tomorrow, guys. We really need management to set the expectation and deliver a plan. Yes, they can just talk about the negative elements. The problem with these past two earnings calls is that Elon was just literally talking about the negative elements, but not focusing on the positive things that they could do to actually address those negative elements. So we will see how much the stock price is affected tomorrow. But one thing's for sure, guys, if we have negative numbers in terms of EPS and margins, and management is extremely bearish on the call here, guys, target this lower area right here. 180 is going to be the lower end of this channel right here. I could see that. The expected move on Tesla tomorrow is about 7-8%, but if we have a really bad call here, I could see that go as low, as about maybe 10%, 11% after earnings, and then potential continuation in the next few days as investors readjust their targets and followed by potential analyst downgrades. Target the bottom end of this range right here, which is also good area of previous congestion, right? This whole 190 down to about 180 area, previous area of congestion in the past earlier in 2023. And I do believe that the bulls will be able to play some better defense at the lower end of this channel, potentially in with this consolidation zone right here. So we'll see how it plays out on Tesla. But as of now, bears in full control. Earnings is either going to do one of two things. It's either going to give the bulls a better chance here with a quick bounce here to set a daily higher low for a daily trend change with some bullish numbers, bullish guidance. But if it goes to the downside, daily downtrend simply continues and we're targeting the bottom end of this channel. But if we get down there, guys, I am going shopping for Tesla for the long term because once again, it will get out of this cyclical nature of the business. Interest rates, when they come down, I do believe Tesla's demand will be stimulated once again. And they're obviously growing production at a very fast rate. So looking forward to very good things for them in the next 2, 3, 4, 5 years. This would be a very attractive price to buy for the long term. Now moving on to our two last ones, Palantir and PayPal here. So Palantir, guys, after such a significant increase yesterday, right? We had from bottom to top here yesterday, guys, about 9% on the day. Palantir pulling back ever so slightly here today, 1.5% here. So like we were saying yesterday, guys, yesterday's move was pretty much like a couple days of trading in one. Such a big move here, guys. We were expecting a little bit of a pullback. Obviously, our short-term timeframes were slightly overbought here. So you can see the bears with the hourly downtrend at this point. So daily consolidation is underway, but that's okay. Daily uptrend was confirmed with this move. We're above our moving averages. We have tons of space now above this line right here, 1607. 1607, higher low, higher high. Now looking to set a higher low, anything above 1607 for that higher low for further trend continuation. And now Palantir is going to have a nice little area right down here. If I can get my box right here. So you can see this area right here, right? So previous support, previous resistance, that's the area of the gap. The moving averages are right there as well. So I'm looking for the bulls to potentially make a play, sit down here on this level of support before a potential price increase here. Palantir doing a good job here on the short-term time frames, bulls back in control. And on the weekly, guys, have a nice little weekly bounce undergoing here as well. So we'll see how high they can maintain that. But I like the size of this bounce, guys, off of your lows of about 1563. It's a heck of a bounce here in relation to our lower high here of 1858 for this weekly downtrend. So they put in a nice engulfing move. Now, can at the same time, now that we have the daily uptrend, if once we lose this daily uptrend, let's say, can we reset into a weekly uptrend? In my opinion, guys, that will have to do with earnings, which are coming out in about 2 weeks' time. So very good short-term movement by Palantir, but I would be surprised to see some major moves to either upside or downside much before earnings. And now lastly, PayPal. PayPal, big investor day here on Thursday, but pulling back here after yesterday's move, still up 1.63% off of the lows of yesterday, but still PayPal daily uptrend is confirmed. So much space right now. So any move lower, right? Just going to be looking for a higher low, anything above 56.50. Looking for a daily higher low for further trend continuation. Keep an eye on this area right here, guys. $63, $62 is going to be the range where I do believe the bulls can find a lot of support. If we come all the way down there, I am expecting the bulls to use this, be able to do a slight little bounce here. And not only is that area of confluence right there, we're also coupling it. Our moving averages are there, and we have the top end of the channel here at about 64 starting to act. So this whole like $64 to $62 should be acting as beautiful support. We're now above our downtrending trend line right here. So we'll see if we have really bullish news on Thursday in terms of the investor presentation. If they announce new lines of sales, new sales verticals, and potentially ways of increasing EPS and increasing margins for investors, I do believe that this stock should have some very decent performance. This was the speculation into that event. So we will see. Is the news going to be as good as the CEO was saying it was going to be? In that case, I do believe it won't be a sell the news event. It may actually be a buy the news event. But if it's underwhelming, then this whole rally up may be met with a little bit of selling pressure after that news. We have some good supports here, but very happy that PayPal, what PayPal is doing in the short-term price action here, looking very good for the bulls. Thursday, very big event, investor presentation, and obviously earnings here coming up in 2 weeks as well. So that's everything I had for you guys in terms of your technicals here. So I'm actually going to be covering, I'll do the portfolio tomorrow because I won't be doing many, changing many trades here tomorrow. Video is a bit long here. I don't want to run it up more than 50 minutes. I know they're a bit long, but we are in earnings season and I feel that I should give you guys as the best updates that I possibly can. So I hope you enjoyed the video. Not many changes in the portfolio today. You'll see that tomorrow. Tomorrow I'll make sure to do a video on the portfolio because I may add, I'll put one or two more positions into tomorrow. We'll see. So we'll do one big recap here tomorrow and then obviously one on Friday as well. So hope you guys enjoyed the video. If you did, consider dropping a like, would really appreciate it. Consider subscribing to the channel. If you're new, we do these daily recap videos every single day after the close and recap earnings as well. And obviously, if you have any questions, guys, leave them down below in the comments. Anything, stocks, options, technical analysis, macro, whatever you want, put it down in the comments, guys, and I'll be happy to answer you. Usually get back to you in about 24 hours or less. So keep that in mind. I'll take care, guys. I'll see you guys tomorrow after the close. Big earnings tomorrow, guys. Tesla and ASML, right? Lam Research, another one of your semiconductors. So big day of earnings tomorrow as earnings season continues. Take care and peace.